Hi, good day, everyone. This is Metrics Trading Professionals, and handling the calls today is Mimi FS. Uh, After our last class, we said we are going to continue from base and quote currencies. So this is the class for it. Remember, we are students always, so always pay attention, write down what you have to write down, and if you have questions, you can ask us via our social media handles. Okay, so a quick one, base and quote currency. In our last class, we were able to discover that Forex is the buying and selling of financial assets, and then we talked about the structure of the financial market. We said we have the stock market, the bond market, the derivative market, the commodity market, of course, the cryptocurrency market, which we didn't mention. Then we have the Forex market itself. So we are trying to expound the Forex market and how we trade it. Before this slide, we have this previous slide where we actually stopped in our last session. Then we said we have major currency pairs, we have minor currency pairs, we have exotic currency pairs. These are things we can actually trade in the online platform. Then we have the spot metals, which include gold, silver. We have the indices. Okay, let me talk about indices. Indices is the collection of stock of viable companies within the economy. Like this AUS 200, that's Australia 200, is an indices, and we have 200 companies represented in a single represented with a single price parameter. Okay, so if you are trading the AUS 200, you are trading actually 200 companies. Japan 225, you are trading 225 companies. We have US 30, US 100, and US 500. US 30 is Dow Jones. US 100 is Nasdaq, and then US 500 is S&P. So we call that S&P 500. Okay, so whenever you are trading the US 500, you are trading 500 companies in US. Like in Nigeria, we have indices, we have the banking sector indices. It's just the banks. All the banks are represented with a price parameter in that indices. We have the commodity indices and lots of indices. So you can trade the stock market by trading individual shares, like buying and selling individual shares of companies. However, you can still trade the stock market by trading the companies as a group, but just one price parameter, that is indices. And then we have the commodity, which include crude oil, natural gas, and the rest of others. Okay, so talking about currencies, that's the major focus of today's record or today's class. So let me share the whiteboard. So talking about currencies, we have two types of currencies. Which are the major currencies? The currency and the exotic currency. Major currency and the exotic currency. Okay, so what are the examples of the major currency? We have the US dollar, the euro for the Eurozone, the Great Britain pounds. We have the Japanese yen, we have the Canadian dollar, we have the Swiss franc for Switzerland, Canadian dollar for Canada, and then we have the New Zealand dollar, we have the Australia dollar. So we have 8 major currencies: 1, 2, 3, 4, 5, 6, 7, 8. Then talking about the exotic currencies, we also have lots of exotic currencies, over 20 something exotic currencies that we have. And then this is it. For instance, we have the ZAR, we have the North Norwegian krone, we have the South African rand. That is ZAR. We have the SEK, Swedish krone, if I'm not mistaken. We have Turkish lira. We have Mexican peso, MXN, if I'm not mistaken. We have the CNY, CHN, if I'm not mistaken, Chinese RMB. Lots of them. Okay, lots of them. Just kind of. Okay, so these are exotic currencies. So exotic currencies are kind of currencies of the second world countries, while major currencies are the currencies of the first world countries. Okay, so when the major currencies pair among themselves, we're either going to have the major currency pair, or the minor pair when they pair themselves. So major pair are pairs of the major currencies with the dollar. Major currencies include the dollar, pairs that include dollar, USD, while minor currency pair are pairs that exclude the US dollar. Okay, for instance, now let's have our eyes off this first. Let's have our eyes off this. Okay, so if I pair have a pair like Euro USD, it includes the dollar, so it's a major currency pair. Pounds GBP USD, New Zealand dollar USD, AUD USD, and then we have the USD card, we have the USD CHF, we have the USD JPY. All these are all major currency pairs. They include the dollar, as you can see. The minor currency pairs exclude the dollar, but they are pairs of the major currency. So if I have like Euro, GBP, I have like GBP, JPY, I have like CAD, CHF, I have like AUD, New Zealand dollar, I have like CAD, JPY, and the rest of others. So your assignment list other minor currency pairs. Okay, try to list them out. You're going to have them. So this is the major currency pair. This is the major currency pair. Major currency pair. Why this is the minor currency pair. And then talking about the exotic pair. So exotic pair are pairs that include an exotic pair. An exotic pair is a pair of currency that includes an exotic pair. So even though it's USD ZAR is an exotic pair, USD ZAR is an exotic pair, USD MXN is an exotic pair. Okay, AUD NOK is an exotic pair, Euro Tri is an exotic pair. Once you find an exotic pair, there is an exotic pair. So let's see, CHN ZAR is also an exotic pair. CHN ZAR is also an exotic pair. So whether it's two exotic pairs or one exotic pair, whether it's two exotic currencies or one exotic currency that is involved in the pair is called exotic currency pair. Okay, exotic currency pair. So having said that, let's now go talk about the base and code currency. Now, if you look at this, we have two currencies in this. We have two currencies here. Okay, everything. We always have two currencies in a quotation. So, for instance, the Euro USD. The first currency pair in a quotation is called the base currency because it's always equal to 1. While the second one is called the quote currency because the price would vary. So we can have 1.13285. We can have 1.13285. Okay, so it means that 1 euro is equal to $1.13285. 1 euro is equal to $1.13285. And then we have the Euro GBP. The Euro GBP is 1 euro. So 1 euro is the base currency, is equal to how many pounds? How much pounds? So this could be 0.85310 pounds. So 1 euro is exchanged at 0.85310 pounds. Okay. Then finally, let me just use the Nigerian dollar, the Nigerian currency. And so we have the USD NGN. USD NGN is $1. And let's say $1 is exchanged at 520 naira. $1 is exchanged at 520 naira. Okay, so if we invert it, so how do we get naira can actually be a base, so it's not about whatever. Any currency can be a base, anyone can be a quote. So how do we get this? 1 naira will be how much in the dollar. 1 naira will be how much in the dollar. So you just say 1 divided by 520. That will give you the equivalence in dollar. 1 naira in dollar will be 1 divided by 520. So 1 divided by 520 will give us 0.0019 dollar, or we can still add to $192. Do you see it? So 1 naira is equal to $0.00192. So what does this show? It shows that 1 naira gives us much more less than $1. Okay, in this case, it shows us that $1 gives us a lot, of units of the naira. Now 1 euro is equal to 1.1. Yeah, euro is stronger by exchange to the dollar. By exchange, euro is more expensive to the dollar. That's what this means. But you can see, you can compare this and this. The deviation here, the disparity here is really much, okay, than comparing. Also, 1 euro is equal to 0.85. It shows that the pounds is more expensive to the euro by exchange rate. Okay, so but if you look at the disparity, it's not also, so it's not too high as that. Okay, so this is based on code currency. Let me quickly try to share a chart. Let me quickly try to share a chart, and there would just end it there and share chart. So you can see this USD card. You can see the price 1.26593. So USD is the base, card is the quote. So it means that $1 is exchanged at 1.26592 Canadian dollar. Okay, then if you look here on this market watch, the price is changing, bid and ask price. Consequently, we are going to talk about bid and ask price, but this tells us that 1 euro is exchanged at $1.1055. A pound is exchanged at $1.31865. $1 is exchanged at 0.9398 Swiss franc. Then 1 pound is exchanged at 1.2393 Swiss franc. Then 1 pound is exchanged at 156.525 yen. 1 euro is exchanged at 131.23 Japanese yen. Okay, so that's how it works. And then, okay, let me open the this crude WTI West Texas Index. So a barrel of crude is sold at $96. 1 barrel of crude, because this is crude versus dollar. So dollar is kind of the quote here, crude is the base. So a barrel of crude is sold at $96.69. Then do I have gold close here? Okay, gold is not closed here, but let me just try to load it quickly, and then let's see the price of gold. Okay, no need to load it. So an ounce of gold is sold at $1941.9. 1942 points. So the price would always change. That's why I said volatility in the first market is very high. Okay, that's that. Just a bonus one in case you're a trader and you could see this record right now. Once this neckline is broken, we're expecting the market to come up to at least 100. This is our first level, this is our first target, which is around 100, 102. Okay, so but we need it to get broken first. We need it to get broken. And that, okay, thank you very much for watching this video. If you got value, endeavor to subscribe and also follow us on our social media handles, and then go through our website at mtradingpro.com to see our services. Thank you very much. Enjoy the rest of the day.